Thank you,
We are
Harry.
now live. Hi. We'll just wait for more people to join us. I'll just give it one more minute and I will start at 4:02. Yep.
Just closing everything. I don't.
Okay, I guess I'll get started now. So you guys can see my screen, yeah?
Yes, thank you.
Okay, so hi everyone, this is Hannah. I'm from the Lloyd's Asia Market Development Team based here in Singapore. Welcome to our first educational program for September. If this is your first time with us, a very special welcome to you. Thank you for joining us today. Before we begin our session, just like to say a quick disclaimer that the views expressed here by our speakers today are their own and do not necessarily reflect those of Lloyd's Corporation and our service companies. This series is intended for educational as well as informational purposes only, and nothing shared here constitutes as a formal piece of advice or is an official Lloyd's position. Same as the session that we had in May, each of these webinar sessions will qualify for one continuing professional development hour, CPD hour. And in order to receive this, please stay with us all the way to the end, where you will then complete a feedback form later. I will share the link, and that will give you recognition for your one CPD hour. Also, feel free to use the Q&A function as well as the chat box to ask our speakers plenty of questions throughout this meeting. And without further ado, I will introduce our session as well as our speakers for today. Our session today is called Parametric Insurance 3.0. Our speakers, Andrew Harris, he is the founder and managing director at Specialist Re Consultancy. And we also have Isa Inadifi and Chief Underwriting Officer from Global Parametrics, as well as Ariana Antonovic, a business developer from Global Parametrics as well. And today they will explore the evolving parametrics insurance market and showcase very special practical structuring tools. So now I will hand the time to our speakers and they can kickstart their sharing. So over to you, Andrew. Let me stop sharing my screen. Okay.
Thank you, Hannah, very much. And thank you to Lloyd's Asia for the invitation this afternoon. And good afternoon to everybody, but good morning to our friends from Global Parametrics in London. And thank you very much to Isa and Ariana for joining us today. Before I ask Isa to talk about Global Parametrics, who really are one of the pioneers of underwriting parametric, I just really wanted to put today's webinar in context with some facts and figures, always a good way to start a webinar. So parametric insurance and reinsurance, as probably most in the audience would know, is really at the forefront of tackling climate risk sustainability and tackling the enormous protection gap, the uninsured exposures, which we've got here, particularly in Asia Pacific, which are estimated by Swiss Re to be more than $60 billion US. So it's a huge opportunity and a huge challenge for all of us that are involved in this catastrophe peril, weather peril sector. So I've been traveling for the last few weeks, and many have asked me at some of the conferences I've spoken at and the workshops and some of the webinars that we've been doing. So is parametric insurance really purchased either by communities or government or corporates? Is it expensive? Does it pay out? And then does it renew after a loss? So let me give you a few facts and figures to answer some of those points, which might help everybody understand the sort of size of marketplace that we're looking at. So first of all, GWP in 2024 for parametric is $15 billion US, which includes some ILS index-linked security placements, mainly done out of Bermuda. And geographically, 50% of that premium comes from the very large US market, where, of course, they have even more perils than we do in Asia, such as wildfires. Everybody will have seen the terrible fires in California quite recently. Also tornadoes, which are obviously very specific to set geographic areas, but also perils like hailstorms, which almost annually destroy a large segment of the very large solar fields. Some of the hailstones are almost the size of a golf ball, and so if they hit even well-protected solar panels, they're just destroyed. So huge lots of losses for traditional insurers, which means many of those traditional insurers are pulling out, are no longer insuring those types of perils, and thus Parametric has stepped in to take care of those exposures. The other 50% of that premium of 15 billion is split between Europe, MENA region, and Africa in particular in the agricultural sector, and Asia Pac, which includes Australia, where of course Lloyd's is well represented with its MGA set up, and that of course has more traditional typhoon and flood perils. So the second question that we get asked is about pricing. Is parametric insurance expensive? Which is a bit like asking, is traditional insurance expensive? So what we answer is that it varies by peril, by geography, by trigger point at which point the claims become recoverable. But generally speaking, we see pricing between about 3 to 10% rate on line. So if you work in the reinsurance field, that can equate to treaty reinsurance excessive loss programs. And so 3 to 10% rate on line for various parts of the world compares pretty favorably. For single risk exposures, Parametric is not as competitive, but there are different elements to single risk exposure for Parametric, such as deductible buy down coverage or top up coverage, and areas such as renewable energy, where there have been significant losses. Traditional insurers either might increase the original deductible or put a sub-limit for weather perils. So then Parametric has a role to play. So latest Parametric products are also an innovation of those originally written 3, 4, 5 years ago. So that's why today's webinar is called 3.0, because we're now very much at the sort of third version of innovation. And that includes, for example, multi-peril parametric placements. After the latest floods in 2024 in northern Italy, the government has now implemented an earthquake and flood parametric scheme, protecting businesses and people's houses. And that's reinsured with Munich Re, amongst others. And that's on an intensity basis rather than the traditional cat in a box, i.e. a designated area of exposure. So that sort of just illustrates that Parametric is in place and is with a new type of cover and an innovative form of protection. Lastly, claims payout. Everybody says, well, does Parametric pay out? And really the best example I've got of that is September 2023. 3 major catastrophes in the same month in different geographies. So we had the Morocco earthquake, 6.4, and the government had bought a parametric scheme for lower value, lower quality housing, and that had a $200 million payout. Secondly, in the same month, as I mentioned, they had the Macau floods, which was a very large thunderstorm and cloudburst, 600 millimeters of rain in 24 hours, completely flooding the city. And again, the government had bought a $250 million protection, and that had a full payout. And then later in September 2023, Guangdong, China, typhoon category 4, where they have such an event heading straight for them today, $250 million payout, reinsured with Swiss Re. All those schemes have been renewed and they are still in existence, thus validating the product. So from my perspective, I really see continued strong growth of Parametric. There has been a separate study on this done by Price Waterhouse, PwC, which was published in July. It's posted on their website on LinkedIn, and they predict that Parametric premium will be 21 billion by 2028, so only 2.5 years away. So that sort of really sets the scene that it is a growth segment, particularly trying to help both business, governments and communities to be more sustainable. We haven't cracked it all yet, but if you compare it perhaps to ILS and catastrophe bonds, which of course have used capital market finance, they were in the same state of growth 20 years ago, and now ILS is $100 billion business, premium business. So that I foresee is the potential for Parametric. So sorry if that's a long introduction, but I wanted to try and put today's webinar in context, and now pass over to Isa to kindly introduce Celsius Pro.
Thank you, Andrew, and we're very excited with Ari to be part of that Lloyd's Academy webinar for Asia this morning. So let me share my screen. Sorry, getting there. Present, that's the best way. So me, I'm the Chief Underwriting Officer. I joined Celsius Pro Group 2 months ago, so stay with me, Ari, step in if I'm saying something that might not be quite right. But why I picked Celsius Pro Group is quite also an exciting thing, is our mandate is to bring Parametric to the center stage, and because we do believe this is a powerful tool to mitigate climate change and then be part of it. So Celsius Pro is an award-winning. We have been on the Swiss-based Global 100 InsurTech dedicated to private-public organization to understand and mitigate that impact and net cat risk. Why we are quite different and what I got excited of joining that purpose-driven company was because we're mixing underwriting services and risk capacity deployment, which I'm heading, with platform technology and also a very keen consulting team. So I'm going to come to that because we are also enabling some pilot project with some financing behind it to see the light of the day, whereas on the private sector side, it might be too small, might not be quite right, but with the aim of the scalability of it. Sorry, oh, you don't see that. So what we do, we have parametric products that you might all know, so I might not get into the detail of it, but if you want, you can always access the brochure of it. You have earthquake, tropical cyclone, excess rainfall, etc. They are the more standardized product, but we go beyond that because parametric can be very flexible. So I will come to that, but as long as you have in a way data, reliable data with good past history that can do a good proxy for your loss, then you can build and structure a parametric product. We're also quite unique in our setup because we're an MGA, but we're also managing the Natural Disaster Fund. So we'll come more towards that, but that a public sector, the UK and the German government putting a fund money with the incredible partnership of Hanover as well to leverage that impact of that fund. And that also is a good signal because you can see this is not only public mandate, this is all of us mandate. So I think that's quite important to highlight there. And they even announced this year that they're going to increase their leverage on the NDF this year to 70% compared to 50-50. Then we also have an MGA backed by Hanover Re, and this year we had exciting news to be a cover holder at Lloyd's thanks to our partner Canopius, and that also is an incredible signal because then it means you can push the Lloyd's platform to expand that type of tool. Where we're also a strong believer of the technology, because we want it to be more understood. The parametric is not that new. We talk about innovation, and it keeps being innovative because data science keep moving at a very, very speedy pace. But the product that itself has been there for a long time, as Andrew said. And so our technology solution are really here to support, to try to understand for client or our insurer how to deploy that product further and have transparency, good understanding. And then our consultant services with the climate resilience solution that I hint about. So really, I see Celsius Pro Group, the whole value chain towards assessing of a problem, structuring it, starting to do even pilot and to be able to scale it with the technology. And Global Parametric was bought by Celsius Pro. So sometimes people get mixed up about the brand, but they're all part of the Celsius Pro group. And really, Global Parametrics usually is our risk deployment entity, if that makes sense. Sorry. Here, Andrew hinted it, but for my worth always to come back. So what I wanted to say here quickly about what is a parametric insurance, or you have other financial instruments that use it. But in insurance, the hard work comes prior to the contract being done, which sometimes for the traditional insurance is the other way around. So you need to define it's peril specific. So you need to define which peril I want to insure, which data I'm going to insure, what is the index that is going to create the best proxy. And then in the contract, everything will be written. So what is it, your data, everything is pre-agreed, and then you will have the payout. And I worked on other parametric company, but literally we were able to pay in less than a few days. So that's where it means that product can help you mitigate losses, and especially in risk disaster relief solution or action or humanitarian, that can be tremendous, because $1 spent 2 days might be saving for later and even for insurance. So that's why it is. Here, that was our vehicle. So it was just to clarify a bit. So our cover holder is global and all sectors, both of them, whereas the Natural Disaster Fund is really targeted for low-income country and try to develop new emerging market development and impact into that. So we really have, in a way, private-public mandate, which is our DNA, and then we're also continuing in the path of growing more corporate commercial sector altogether now with this free investment vehicle. We are client focused. What I wanted to say there is it's solution driven. My background also alternative risk transfer, so I really believe that we're here to solve a problem. So here we can be flexible, and Parametric is a really good tool for that. We sector agnostic because everyone is facing the hit of NatCat and weather perils. We are focused on the climate and weather and NatCat. We are not looking at cyber and etc. There are some solutions out there, but this is not what we are looking at. And we do mostly insurance, but given we have that amazing NDF capabilities, we also can support cat bonds and other financial instruments. And very important point to me, we're not here to say Parametric is a solution to everything. Parametric is a powerful solution along with a different suite of risk management tools. So we really, really value the additionality and people understanding why they're buying it, how it complete what they have, etc. Lloyd's, as we're in a Lloyd's webinar, I think that's incredible that they have welcomed us in that platform with kind of pure support, because I think that should help bring the Parametric to the next level of adoption. There is the strengths and reputation of Lloyd's brand, the strong credit rating, which is important as well. And that's the trust also about the payout, I think, for example, it was really, really good that I heard when I joined the company that on some payment, people were incredibly surprised because we paid even before they ask because of our technology. And I think that's really, really good. And that needs to be important because client understanding of the product, but also living the reality means how we're going to push further to develop that tool. Obviously, there is a license around the world, which comes to the Asian specific part of the world, but not only. And also, I think now we're covered, Lloyd, I hope is going to help attracting more capital towards that deployment on that tool. So just the NDF to show a quick few numbers. So the NDF has different KPIs, not only premium and limit deployment. We are monitoring the number of beneficiaries and vulnerable beneficiaries. So here we're talking for Asia, 7 million of beneficiaries supported through the Parametric solution that we have sold across the year. 73 country covered, 61 million capacity from the private, 23 payout, 39 transaction at risk, 13 TA project, which is what I meant when I say we're also developing smaller pilots, and 20 million payout there for a total of 42.5 million beneficiary. So that is the reality. We're not doing it for the sake of it. Celsius Pro Group portfolio also so far has been good in the sense of diversification, because it's another benefit where you can definitely create diversified book to address different area need and problems. So we're for 35% Americas, Caribbean. We don't have US at the moment because we will try to develop that. It's PCAT. We have a good presence in Africa, which is really good. South Asia is 16%. So I think it's probably something that's quite good. Also with the Pacific, you can see Southeast Asia 11%. So it's quite a fair bit of our portfolio. And we have a lot of cover that actually a bit of everywhere, as much as you can see in terms of peril. We do have CAT, but not only, because we have different type of industry sector, agri, but not only. So in Southeast Asia, I think what I wanted to explain here was this is not new to them, but it's still early stage and it starts to pick up. And so that's why it's really exciting. So Andrew hinted some Guyana program, but we see local city, massive program starting on precipitation, for example. I saw in the past aquaculture deployment because it was difficult to ensure on the indemnity side, because also of the change of slow, but change of fossil fuel, we're seeing more renewables. So we saw a lot of requests around wind or solar farm in my past company. So, and we did transact on that. Sometimes it was even triggered by regulatory requirement. And then you have the less probably more developed country like Australia fully picked up Parametric, very present there between wildfire to flood or hail, for example. So that's already exists. But I think what we need to keep pushing for client brokers to understand that is you can always do a bit of peace there, because some fast and transparent payment can get you ahead of some problems. So here I'm going to hand over to Ari to explain to you some of our sustainability case.
Thank you. Thank you, Isa, for the introduction. And yet, just to give maybe a quick introduction of myself as well. My name is Ariana. I work in the business development team for Global Parametrics Celsius Pro Group. And I have been working at Global Parametrics for the past 2 years, but I have been in the parametric space overall for the past 4 years. So I would say I've seen quite a good experience in placing parametric business, both on commercial and kind of development impact side as well. And before that, I used to work in property underwriting, so helpfully that helped me understand better about how to combine parametric with traditional insurance, where do they complement each other well, and where they maybe don't work so well together. So I will give you a few possibly case studies as quickly as I can, because there are many, especially in Asia and Southeast Asia region. And as Andrew said, we are in a 3.0 parametric space right now. So definitely the cases have become more bespoke, multi-peril, more and more tailored to solutions of each client. So parametric has really become a solution that can fit the needs of each client individually, fit their distribution system, their particular risk exposures, because when you remove that kind of restrictions of traditional indemnity insurance policies where you have a set of how you should use the payout, you really understand that anything can be insurable with a parametric policy. And that's really the beauty of it, when you need the flexibility of how a payout could be used. And I will just show through a few case studies of how this could work. But for example, if we think of, let's say, a humanitarian organization, and for this case study, I chose Tear Fund, which bought multi-country drought cover to protect the countries of Ethiopia, Malawi, Nepal, and Pakistan. And if you think of the kind of portfolio, country level wide protection, it would be very hard to insure it with an indemnity policy. And it would be very hard to quantify and do any loss adjustments on the losses or type of action that the humanitarian organization might need a payout for. So when they need to aid very quickly in these countries post-disaster, or even think about anticipatory action, the parametric speed of payout when there is a drought, for example, helps them aid quickly. It helps them help to relocate the communities on ground, let's say to higher ground, distribute the vaccines in time, cover for the food and water security as well. So this is where parametric insurance works very well, gives you the flexibility, gives you the speed of payout. And a lot of the governments are actually buying multi-peril parametric policies now as well for this disaster relief protection. So another maybe example that you might have heard of in Asia is SEADRIFT, the Southeast Asia Disaster Risk Insurance Facility, who have bought a parametric cover for multi-perils. So it was flood, tropical cyclone, earthquake, landslide, and the ensuing perils. And it was for the country of Laos. So this is an example of a parametric insurance policy that was based and triggered on the population affected numbers issued by the country. So these are different examples of how a quick payout could be very flexible and used by different organizations, governmental, non-governmental organizations as well. And then we have many case studies as well where parametric is used for kind of portfolio level protection by the local insurance companies. So more and more we see the case studies where, let's say, a local insurance company has very exposed portfolio, could be property portfolio, could be construction, could be agriculture, and they wish to protect their own portfolio or place a treaty on the parametric side for, let's say, drought, flood, earthquake, or tropical cyclone. And another maybe like third way of deploying parametric insurance policies could be through microinsurance. And this is really where the pilots play the biggest role, because a distribution for microinsurance parametric policies will be different from client to client. So we have many case studies in our portfolio with Global Parametrics and the Natural Disaster Fund. And just going back to some cases, we place, for example, coffee farmers protection policy. with Bao Minh Insurance in Vietnam, and here we placed it with WTW brokers, and it is based on a lack of yield due to low rainfalls. It's a very simple rainfall parametric policies. We track how much rainfall there was, and based on the client's experience of past losses, we can set the trigger and then improve year by year to make sure that the payouts are correlated to the actual farmers' experiences. Also, one similar to that one in Asia would be, for example, in the Philippines. We piloted the product and designed it back in 2021. It was actually one of the first piloted programs, I think, by Global Parametrics and Ibiza. And we co-developed the product for excess rainfall and wind speed for the farmers that were buying microinsurance parametric policies through the farmers cooperatives in Philippines with the local insurance claims, retaining part of the risk. And now we are in the kind of fourth, fifth year of the renewal of the policy, and they are really expanding it to all of the provinces in Philippines. And now they are increasing their retention, involving the local reinsurers as well. So we really saw some scalable pilots as well. It's not always like small numbers. So when you have a good solution, when you work on it and really tailor it to the client, it shows how you can really scale and make an impact, even with the microinsurance policy. So these are some case studies and example I wanted to point out today, but there are many more. So if anyone is interested, I would definitely say reach out to myself, to Andrew, to Isa, and we can share maybe some particular case studies that might be interested to you, to your company or your clients. And if you think that there is any questions, we would be very happy to answer that. Andrew, I will let you just add any comments or questions maybe before we go into the tech solutions. But yes, thank you. Thank you for giving me this time.
Okay, thank you, Ariana. That's very comprehensive. Thank you. I just add, because it's not mentioned on your map and it hasn't been on ours, there are three major insurance markets in Asia that until this year didn't approve Parametric, and that was Japan, Taiwan, and Korea. And each of those, the regulator has undertaken, particularly in Taiwan, undertook a task force study, and they have recently announced that they are approving parametric products. Japan has recently started. Swiss Re pioneered that in Japan for many years, but now Descartes and HDI have a tie-up, and Korea is now moving into parametric. So those are three very large insurance markets that we think of, both for traditional insurance and reinsurance. So that will further help the product grow its reach across Asia. But no, I'll pass back to you, Ariana, to talk about technology. We've heard a little bit about how important that is in terms of satellite observation, pre-warning, and assessing the event after it's occurred. But the tool that you're going to demonstrate is, I think, quite unique in the market. So I'll hand back to you to let you discuss that.
Thank you. And yes, so when it comes to this new era of parametric insurance, I think it is very important to know that it is now easier than ever to write, place parametric policies. The bespoke solutions obviously still require a very sophisticated modeling and underwriting. And for that, you will always have to go to the experts in the field to place these very complex risks. But on the other side, there has been more and more development on the technology structuring side of parametric policies, and there are platforms available that enable both the brokers and the insurance companies to adopt quickly the technologies, download the data, and use these solutions for structuring, event visualization to their clients, payout visualization, so that you can go to the clients and you can show them, okay, in this year, this is how much you would have been paid if you had a parametric policy, and also expected losses calculations, so that you get a very technical rate online, which you can go either to the market with or place with your own capacity. So Celsius Pro Group has these platforms. One is Parameter Pro, which is a broker platform solution that is subscription based, where you can download all the public, free, independent, available data sets to structure your parametric policies and discuss them with the clients. And there is also a white label platform which can be used by the local insurance companies. And on the platform, you would be able to quote and bind parametric policies directly. So these are just some of the solutions available in the market. It's good to know that they are out there. It's good to know that it's been now easier than ever to write parametric policies. And I can give a quick overview of how this might work, or just a quick visualization based on, I'll try to be quick, how much time we have. Let me know if you can see my screen well.
Yeah, that's good, thanks.
Perfect. So this is just an example of how a parametric platform might look like, but we have global data sets available, and depending on which peril you want to underwrite, some available are the National Hurricane Center, the JTWC dataset, the United States Geological Survey for underwriting earthquake parametric policies, and then ERA5 and IMERC datasets that are available to download for underwriting climate risks. So just as an example of what this platform can also do when you have discussions with your clients, you can also show observed events of tropical cyclones and earthquakes historically. So if I just show an example of that, filtering from 2020 to 2025, but you can go all the way back to 1990 data, and I'm just filtering it from category 4, otherwise I would really have a big amount of tropical cyclones here. But you can see the visualizations and kind of regularly, hourly updated data sets of the tropical cyclone, typhoon storms. And then if you, let's say, have a client that's close to Cebu, or you want to see a certain track, you can load into it, you can click onto the landfall, and that will give you the name of the windstorm, it will give you the wind speed, it will give you the category and the timestamp of the storm that you are looking at. So really you can see this globally. I'm just choosing one part here. And then we also have observed earthquake events similarly. So you can see earthquakes globally and where your clients or your portfolio might be affected. Again, you can really zoom in, you can check and click onto the earthquake event, and you will be generating a shake map that shows you the peak ground acceleration value in the areas. You can see the intensity of the earthquake in the area of your client, your portfolio, or for the purpose of discussing the parametric risks. So this is just one thing that the platform can do, but then obviously if you go into the actual modeling, you will be able to place a circle, choose a location, and do a quick underwriting exercise where you would add a circle or multiple circles across your portfolio. And then what the platform can do, it can also show the observed events, as in we will see which events intersected with the client's circle or the location, for example. And then you can choose your own limit of the location. You can choose the payout structure. So this is very easy to amend and edit and play with in the platform. So you can see how a different payout structure would have affected the client's location. And if you do click on calculate, you will get a very estimated loss calculation, which is a blend of the historical events which affected the location and a blend of the modeled data set as well. So simulated 10,000 years of events in the platform. So if you wait for a few seconds, it should appear on the screen soon. And now you can discuss with the client how much of payout they would have gotten historically. Does this policy make sense for them? How much they would have approximately paid for a policy like this as well. And you can export and save the data and discuss the historical payouts with your client. So I can say to my client, okay, in 2021, you would have gotten 300,000 US dollars payout based on a 1 million limit and based on the structure that we selected here. So this is an example of a tropical cyclone policy, but the platform can also do kind of the same for an earthquake policy. So you would also select a circle and model and see the estimated loss of an earthquake policy, or you can also work with the gridded data sets for climate data. So you can also look at the temperature, extreme temperature, rainfall, lack of rainfall, drought, and similar climate data sets, or you can just download the data sets so that you have a good overview of what the historical index should look like. Thank you. So I hope that leaves kind of enough of time for us to also do a quick Q&A, because I would be interested to see if anyone had questions, and obviously if interested in any particular product or case study, we can go a bit more deeper into that as well. Thank you.
Okay, I think maybe we can kickstart. I saw a comment in the Q&A function. So if anyone, you have comments or more questions, just feel free to key it in. But I just saw a comment by Ati, and they were talking about needing more case studies on parametric losses and paying back to insured. So between the three of you, please feel free to share or add on any more in your experiences, case studies. Relevant case studies, yeah, that are related to the parametric losses.
Okay, shall I go first?
Sure, if you would like to.
Okay. All right. First of all, perhaps we should just mention often in Asia, the parametric is arranged as a reinsurance. So there will be a local insurer that writes the original policy. And that depends upon each individual insurers whether they wish to retain any of the risk. But for certain perils like flood, for example, they're quite happy to reinsure 100% of it, because they feel that they haven't yet got a complete understanding of how to underwrite that peril profitably. So they're more than happy to reinsure 100%. But the structure of the reinsurance is such that often, if it involves an original insured, then that's quite a straightforward claims payment structure, in that when the event has been determined, and then global parametrics and their reinsurance underwriting partners make the payment to the insurance company, who pay it on to the insured, similar to traditional business. But in quite a lot of the schemes that we arrange these days, there will be a digital distribution platform, and they are the ones that are issuing. There'll be a standard insurance company that will be issuing a master policy, and then the digital distributor will be actually allocating individual policies to tens of thousands of insureds for micro insurance products, low cost and modest payout benefits amounts. So then for the insurance company, they would have to have a huge army of claim staff to administer the claim. So very often we arrange within the parametric wording, which markets like global parametric support, is that the claim is paid directly to the distribution channel. So it doesn't go through the insurer, which ensures that the claim gets paid very quickly back to the original insured, which is obviously the purpose of the parametric insurance, to provide some financial protection for the catastrophe event that's taken place. So slightly different structures as to whether it's single risk or reinsurance. Perhaps that just covers one aspect of claims, and perhaps Ariana, you might talk about something else. Yeah.
No, I just, because I think you're hinting on the important point, is usually in the contract you will pay to the insured, but if the insured is a group, for example, or a cooperative and everything, then they will have to think in advance how they're going to display the money at their turn to the beneficiary, for example, and that's quite an important bit. It happened in some of the quake payment. So that's something that is a learning experience from the past, that you need to be able to go through the whole thing, because on our side, from insurance reinsurance, it should be very quick. On the side of the insured, then if you have a different beneficiaries, you should have thought ahead of time how you're going to pay that money to this population, for example, if it's farmers, or which is quite different from a corporate. But even on corporate has been interested, because sometimes you will use the fin clause, the financial interest, and etc. But you need to think it through, how, if you're taking a group policy, for example, how you're going to get to the subsidiaries or the branch you wanted to access at the first place, even if it's at a headquarter level. So just wanted to add on that bit.
Very good. And I think that when it comes to the actual case studies of payments, I think there are many online that kind of nowadays can be also easily retrieved. But if you're interested in any particular ones, please do reach out. We obviously, through Global Parametrics, we paid out 16.5 million so far in claims, which means there are many case studies that show a parametric insurance does pay out. Some of our biggest examples of successful parametric policies that did pay out would be, for example, in Africa, we have a drought water balance index parametric policy with 1 Acre Fund, who are distributing to farmers directly through their fertilizer distribution system. And when they had a national emergency of drought in their respective countries, they have received a full 100% payout, which is a very good example. Andrew also hinted on Morocco, the government of Morocco, which we're obviously very happy that they received a 200 million payout after an earthquake. And even though the payout is very quick, sometimes, the distribution of the payout to the end beneficiaries or individuals does take a longer time. And this is where we should work together to build a better infrastructure, better technology, better connectivity on ground to make sure that those payouts reach the end beneficiaries as quick as possible. So it's very crucial to find the right partners on ground as well to kind of distribute these payouts, and who will do it diligently. There are also some very good large parametric insurance payouts. For example, the Caribbean, especially the CRIF policy, which I think paid after Hurricane Dorian in 2019, and they received 12.8 million payout for the Bahamas in the 14 days of the landfall of the hurricane. So 2 weeks, they received 12 million. And then there was a 2021 Haiti earthquake where CRIF paid out 40 million to the Haitian government in a matter of a few days as well. So these are some very cool examples of how quickly parametric insurance worked. And then I had it noted as a case study, but didn't go into depth yet. But there is also Pacific Catastrophe Risk Insurance Company, and they are ensuring the infrastructure and the network connectivity of the Pacific Island nations. After Harold in 2020, they made payouts to Tonga, Vanuatu, and the Solomon Islands as well. But yes, I think there are many more cases of where parametric insurance paid, where it paid well, where it was renewed. And then the uptake went up as well with the neighboring countries once they heard about such products. So yeah, these will be some examples from my side. Thank you.
And if I may, it's the same in the corporate world. I also want probably to give a funny story where as Sales Pro, we also act as a settlement agent. So we calculate the claims, we reach out to you to tell you, hey, you had a claim. It was in my former company, so it was not that case, but we do the similar thing. And we were reaching to the broker saying, hey, your client had a claim. So in a way, prior to the client already assessing his problem, we were able to anticipate and go ahead of the client. And the broker, who was his first parametric thing, it was like, I never seen that. So I had to chase him to, in a way, get the proof of loss statement, because it was in a country where we were requiring one, which is nothing scary, just a declaration that the amount you have faced as losses is up to a certain amount. And it was kind of hilarious, because I had that point where I'm like, you really need to give it to me, because I cannot pay if you're not signing that document. Anyway, so I think he was really, really pleased of that payout experience, and the client as well. So yeah. Also, maybe touching on loss case study, it's quite important to say it does pay claim, and it's very important as any insurance. But as you can see from the diversification, you can also build like a diversified book. So it is profitable, and it has to be sustainable level of pricing as any type of insurance. So it's not cheaper, it's just working the same way. But yeah, so the payout claim experience is quite different.
Maybe also good to mention that even some of the largest insurance programs in the world, like let's say the PMFBY scheme, which is a crop insurance scheme in India with the government, has largely a parametric proportion of the book as well. So the satellite imagery, the ability to claim for the losses on a basis of a trigger happening makes the administration for the local insurance companies so much easier to claim than if you had to, let's say, do area yield or loss estimates for every single district, every single village, and then decide how to distribute this. So this is something that is taking adoption quicker, even in the large kind of schemes that are hybrid in terms of indemnity plus parametric, and this is very much possible to do.
And
Okay.
maybe another,
Oh,
sorry, go ahead.
sorry. Go ahead, no worries.
No, I was just saying also something you need to be paying attention in a parametric contract is usually you should have a fallback methodology, because we live in the data science world. So even if it's not perfect, you will have a second layer of things that can happen. So it's not stopping the story here. And it's now, I would say, a market practice to have this in place. So that's also another level. I think there is another question, but Anna, that's you.
Yeah, so thank you all for your insights. I do think that there was a very deep discussion that we have. And you know, just shifting gears a little bit, we have one interesting question that came through, and I think this is quite I would say something that would be quite relevant for different stakeholders and different young joiners of the industry. And that question is can you recommend any structured training opportunities or say even materials, right, on parametric insurance for young professionals? So any thoughts?
Well, I conducted a parametric webinar with the Singapore College of Insurance, who are my partners for that, which I think was back in July. So the material may still be available. And I think there's going to be a follow-up in 2026. But so certainly either somebody can contact me for that material or the Singapore College of Insurance. Perry Tan is the head of training there. So and the advantage of doing it through the Singapore College of Insurance, one, you get your CBD hours, but also it can lead on to certification. I think on the course that I did, we didn't do a Q&A, but on a 2-day webinar, everybody has to take a test, and if you don't get 70% pass mark, you don't get the certificate. So you have to pay attention for 2 days.
Okay. Cool.
And
Any other
I would
tips?
say you can also go on the website of all the parametric player, because you will find a lot of use cases and interesting, you know, including the World Bank. And there are a lot of materials out there explaining parametric and some different use of it.
Yes, there are a lot of insurance journals with case studies, active webinars like this one as well to ask questions. And I am hoping that Chartered Insurance Institute will add a parametric course soon. I've seen a lot of NetCat modeling courses, which could be very relevant for parametric as well, it really depends what role you are going for, right? So if you're looking for underwriting, then it would more be taking the underwriting NetCat modeling type of courses. If you're looking into business development, then it's really getting familiarized with placing parametric policies, what's valuable in the market, and staying kind of up with with the market movements, and perhaps taking some kind of internship or an associate role to start as well. I think hands-on is always the best, isn't it? If your company wants to train someone on a parametric insurance specifically, then I would suggest, for example, subscribing to something like the platform that we have, the Parametric Pro platform, because this would help you get really hands-on technical experience on structuring the policies, how the different structures affect the location, and you can really play around with the data itself and kind of use it on maybe some real-life cases that you have in your property portfolio, construction portfolio, or some real clients as well. So these are different, perhaps, pathways to take.
Okay, thank you so much. For our speakers, any closing comments before I close off the session today, and then I'll put in the feedback link. But yeah, any final thoughts?
I just add one comment. We've talked quite a lot about government purchasing the schemes, and we had the experience in Malaysia where we were providing a community-based excess rainfall and flood scheme, and the government didn't want to pay the premium for the parametric. So we had to think about, well, who's going to pay it, and so we eventually managed to get the cost of the product itself, the coverage itself, down to I think it was approximately $15 annual premium. So it was about this was in Malaysia, 5 ringgits a month or something of that nature. And so we reached out to through the insurance company to the utility company, and they then added a third line to the household's monthly utility bill. There was an opt-out option for the household, but when it was explained by the insurer's network of branch offices to those householders that said, currently you're paying for water and electric, but from the 1st of October, there will be an extra item of 5 ringgits a month, which will give you calamity cash coverage. So if your house is flooded, you will receive X amount of money. So I think the take-up was about 80%. So most people bought it because at the moment, they didn't get anything from the government because it was means tested. And therefore you had to be of very, very low income in order to receive any payout, which was only 500 ringgits in any case. So we managed to find a compromise solution. This protects the government's emergency relief funds, but actually provides a product to households which they contribute to themselves.
Thank you, Andrew. Oh, I just saw that in the chat we have one last question, so I will squeeze that in for 2 more minutes that we have. Is there any minimum sum insured that your firm will review the potential client portfolio, i.e. US 100 mil assets?
That's a lot. I think it doesn't go that big as a minimum sum insured, and it's quite flexible depending with which capacity provider you would place the business with generally. For example, if we're talking about pilots and more development impact type of placements, they can definitely go lower and more flexible on the premium and limit size. If we are talking about commercial business, I think the general kind of industry average is around 1 million sum insured or $800,000 to start with.
Yeah, I think it would really depends on the type of rate and premium. So everyone would have a minimum premium and minimum deployment. And the pilot is the same. I think in here, I would say also with cautious is you need to see the view of how it's going to scale, because no one is resourced to do 10K small things that will not go anywhere or be replicated. So I think it can vary towards also how easy it is to structure, if it's a commoditized product or not. So there are different elements. But you can always reach out. So you're not limited by the 100 million or some insured, that's for sure.
Thank you, everyone. Thank you, Hannah, for today.
Yeah, thank you all for tuning in, and also once again, virtual clap for all three of our speakers. Andrew, Isa, Rihanna, thank you all for your time. Our next session is on Thursday with Protos Labs, and for that one, we'll have a webinar on agentic AI and transforming cyber risk. So yeah, please feel free to drop off the call, and thank you all. See you again. Thank you for your time. Bye-bye.
Thanks, Hannah.
Thank you, everyone. Nice to meet you, Andrew.
Yeah,
Bye.
and you.
Bye-bye. Thank you.